So which is your view about the current market situation?
We had a very weak start to the year, especially when it comes to equity markets. And the main reason for that was that some investors fear that the growth outlook will not be as robust as we would have expected before, especially when it comes to the US economy. Some researchers and some economists fear that there will be weaker growth this year. We don't share this view because we think that the growth will be fine and robust also this year. And therefore we think that the current market volatility is a little bit overdone. We think that sooner or later markets will come back to the reality that the outlook is okay, and this will then lead to a recovery. This mainly refers to equities, but this also refers to other markets like high yield, for instance, also emerging markets to a certain degree, and especially this also refers to commodities. Commodities have been extremely weak, especially the crude oil price. And also here we think that the moves on the market are exaggerated, and sooner or later there will be a bottoming out of this correction, and will provide interesting entry points for investors which have an investment horizon of like 6 or 12 months.
So in this landscape, which are your choices to earn the best performance?
As I said before, we think that there will be a recovery in equities during the year. Here we mainly focus on European equities. We think European equities are very attractive from a valuation standpoint and also from a growth standpoint. Therefore, we increase our weightings and our investments in European equities. Beside this, we are also increasing our investments in European high-yield bonds. They provide a very interesting and attractive yield at the moment. And what we have done already earlier this year, we have increased our weighting in commodities with a focus on the crude oil price, so energy to be more precise. Those are our choices at the moment. What we are less optimistic for is US equities, where we think that the valuation argument is not there, and where we are still very cautious and stick to our below average allocation.
Thank you so much.